Hey, this is David C. I'm the broker in charge of the brokerage, and we're here with a market update for really what the first half of the year has done and some steps that you can take that are really going to benefit you for the balance of the year, and how the market has shifted and what you really need to be doing to pay attention to these changes and how they can impact you personally and also professionally. So just as a reminder, we're residential realtors, we're also commercial realtors, we're investment realtors, we're business brokers, and we're property managers. There are no silly questions. We love answering questions. You'd be amazed what people ask us, and we're always willing to share our knowledge. Any of our agents are, to help people get the answers that they need, especially as the economy is changing a bit. But we like to recap and make it simple for you. This video accompanies our written research paper that you're welcome to have. It will be on our blog, and I'll post the link under this for you to find later, or the text that will be relevant and corresponding to the teaching. We love to use this visual because this visual simplifies the Charleston market and makes it extremely easy for you to see where each asset class is. Where is each asset class? So you can see hyper supply, or is it multifamily and industrial, and we will certainly expand on that. And then we have an expansion mode, our retail in the mid cycle, and our office cycle is in the late cycle for office. Interesting things, and the next slide will summarize why. And then we have residential in the recession bucket only because we don't have a normalizing bucket, but we certainly think the residential market is normalizing, and we'll expand on that now. So what's the overview of the asset classes? And especially if you're an investor, some people get excited to talk about cap rates. Let me just take a moment to explain to you, the cap rate can be an extremely misleading way to understand the health of an investment. Cap rates only take into account 1 year, and that's usually a perfect situation of 1 year. So when you are looking for cap rates, especially in the market of Charleston, you want to be very careful and employ underwriting fundamentals that make a lot of sense. Your banker can help you with this. Certainly we can help you with this. All of our agents have access to tools that help them underwrite, and they can roll it up to me if they ever have questions. So anybody on our team can get that conversation started for you. But what you're going to see in office, and I won't read this out for you because you can pause the video and read the screen, and it's also in the report. I'm just going to go down to the cap rate summary there. We're seeing cap rates for Class A at 6.75%, up to Class B of 7.65%. So what would that mean? That's how you want to underwrite your first year to see if you're comfortable with the investment in the asset class. The same in multifamily. We have a tremendous hyper supply and a lot of cranes in Charleston, if you haven't noticed, with product that hasn't been delivered, while we have a fundamental shift of a lot of renters that are now favoring the standalone single family property because their lifestyles were impacted during COVID. Don't run away from this fact. And that's why you're seeing a surge in developers that are building rental communities. Rental communities where people can rent, have a little bit of yard for the dog, the first, second child. This is shifting, and this is going to be impactful for the multifamily developments that are currently underway. And there may need to be some rent resets once they're delivered, and once we understand the tolerance for what people are willing to pay in rent, especially if the economy pulls back and companies start to downsize a bit. Cap rates are there for you. Retail, it's very interesting to understand that if employment comes back into play, you could see people holding on to their dollars. Right now, we still have some pent-up savings. People are hanging on, not hanging on to the dollars, but we're starting to see that behavior of people pulling back. So pay attention to that, especially on the larger economy. Industrial, we've been blessed in Charleston over the last 6 or 7 years to finally have an economy that wasn't driven just by tourism, with the Boeing effect being real, with the deep harbor that we have, all of those compounding effects. It's been really hard to find any sort of warehouse for a couple of different reasons. Ancillary suppliers to people that want to be in Charleston, have third-party logistical companies. It's also been interesting to see people shift towards the investment there, but now construction cost is pulling that back a little bit. So I'm not so sure that we could say that we have the ability for that to be hyper supply. I think we're underserved in the industrial market, but expect there to be some balancing as consumer dollars change. Amazon's figured out the warehouse, but they've announced they're going to be changing the way that they actually flow out. Watch our ports, watch the Greer Inland Port, watch the discussions of rail, and watch the discussions of trucks, how they get on and off the road, especially in Charleston. which of course we all know we have some traffic issues and highway issues that need to be faced at some point in time. And thankfully, some good planning appears to be underway. Just the summary on this slide is the takeaway is we have surged in our inventory from a residential real estate perspective. Where last report, we had 2,400 homes available for sale, knowing in relative information, 5,600 homes was our pre-COVID stable balance of inventory. So COVID, we went down to 1,200. Now we've surged back over probably 400 homes a week was coming online. So last time we reported in, we were at 2,400 homes. Now we're at 4,300 homes. So what does that mean? It means that the market is starting to find some balance. Mortgage rates climbing is helping that. And so how do we get that surge of inventory? Sellers that were really holding out to get top dollar, I think they've started to realize, oh gosh, we should have put this on the market a little bit ago. Also, with the increased inventory, the people that didn't list because they didn't know where they were going to move their families, and they certainly wanted to have one property leading to the next, those people now have said, well, it's going to take longer to sell. It may take a little bit longer for us to qualify and find the right home from mortgage perspective. So those folks are jumping in as well. And that's why I think we're really getting the increase in inventory. And that's what our research is showing here. Commercial real estate, our monthly stats, we're tracking these. We always have these available for you. We're really starting to see a couple things in the commercial market. What we're seeing is that there was a surge in commercial real estate, just like there was a surge in residential real estate. And what happens is the inventory, the deals were all getting under contract. It literally felt like every time we called with someone that was already under contract, right? And the most concise information in our market is in the residential MLS. Sometimes the most unconcise is in the commercial MLS, and that's getting better. We're actually changing our software there. But what I want you to take away from this slide is that a lot of the deals got done, but now people are really pulling back commercially as well and having to re-underwrite what their budgets are, especially if they're small business owners, because the commercial interest rates have also climbed, and you historically see those track the residential mortgage market. And you know, those terms come due shorter than, say, for example, a 30-year fixed residential mortgage. Most bank notes for commercial are 5, 7, or 10 years. And some of those could very well be coming due, which is going to make some commercial property owners realize, well, this was a good deal when my rate was what it was, but now we need to go to market and maybe unload this if it's not easy to qualify for a new rate and term. Investment real estate, please, just like in the cap rates, know your recipe. Don't get in the car and go look at an investment property until you do some preliminary back of the envelope underwriting. It doesn't make any sense to go out and fall in love with the property until you see the way it flows. And also you have to be really underwriting your tenants. What did they do during COVID? What kind of business are they? Are they going to survive? We don't know. I think a lot of people in the retail markets have really been living on fumes of the PPP and EIDL money. EIDL loan payments are coming due in October, November, and December. Not the full amount, but it is a new payment that a small business owner will have to pay. And I think it will reveal some cracks in some business owners if they really don't understand how to run their budget tightly. Business brokerage, a lot of businesses coming to market. We've picked up a ton of real business listings, and we knew this surge was coming, but I think it's been compressed and is accelerating faster because of what I just mentioned. And does an owner know how to run their business on a profit and loss perspective, or have they been running their business out of their checkbook? Listen, you can't run a household like that. You certainly can't run a business like that. So it's a great time to be shopping to buy a business, and it's a great time to value your business. Any smart business owner values their business and puts it on their personal financial statement on an annual basis. And we always do that for business owners as a courtesy, as long as you can provide us the information that we need. Reminder, this is the takeaway. I'm a visual guy. I love visuals. John and I, we create this to make it easy for you. This corresponds with this research. It corresponds with the research paper. Take a look. Let us know if you have any questions. We absolutely love what we do when we're helping residential clients, commercial clients, investment clients, people that need to buy and sell a business, property managers. I'm so proud of my team. I cannot thank my team enough for working so hard. By their hard work, we will be receiving a Roaring 20s winner this week in Columbia. John and I are just humbled by the way that some of our agents have come on board and worked so hard. If you're thinking about getting to real estate or business brokerage, you have questions, please ask me. We love to mentor, we love to train, we love to coach. We'll take you unlicensed and put you in our training program, and then we'll help you get licensed and do it the right way. It's really important that we become experts and help people. There are no silly questions. We're always here. All I can do is thank you for your time. Thank you for your business. Please, we're so passionate. Help us find new customers just like you that have been so good to us, and great agents that have been so good to us. We really believe in what we're doing. We're so excited, and we're having a ton of fun. You win here at the brokerage. Thank you for your time. I hope that you find this to be helpful.